Again. We're gonna be starting very, very soon, guys. Bear with me. We got about 5 minutes till we're starting. Just getting everything set up. I will ask ChatGPT. That's what I'll do. ChatGPT has to say about this. Maybe they'll help me fix it. Starting in 2 minutes, guys. 2 minutes and we will start. I'm trying to figure out how to clear my cookies here. It says that might be a fix. We'll give that a shot. All right, we're starting up here in just a few minutes, guys. Bear with me. We're trying to get these the polls working here. Give this a refresh. Now it's saying the live stream's not available. That's not good at all. Interesting. Bear with me, guys. Just need a few more moments. Kind of did a whoopsie boo boo. We gotta figure it out here, though. Just bear with me, guys. Starting here in just a minute. Let me mute this microphone, big. What's going on, team? It's good to see you. I am glad to be here. I got a lot going on right now. We got some technical difficulties. The baby's, we're trying to put the baby down. Go to sleep, baby. Go to sleep. But yeah, I seem to clear the cookies out on my YouTube page, so that way we would have a nice, fresh new start for the YouTube polls. And sure enough, it completely deleted the analytics on my show. So right now, as we speak, I'm doing my absolute best in order to get this up. Yes, this is ZAPP. This is the one that we took in the Discord. We're going to see what happens with ZAPP. I'd like to see this thing rip, tater, chipping for a little bit of everybody who's in it. If you're in it, let me know. Let me know. Let's see who we got in here. Dan Bob Dan, the greatest moderator alive. That's me. That's the David Worrell. That's my other account, my premium account. We got Damn Yankee in the building. Beef Stewie, what's going on? I was looking forward to polls too. My biggest issue though, man, I'm telling you, it's horrible. I got the worst technology luck, I guess you could say. I got the worst luck with technology, which is almost nearly crazy to think, because here I am trying to run a stream live for you guys, and you know, is it going to work out? I don't know. Maybe it crashes and burns. Either way, we're going to make it happen because we always adapt and overcome. If I get to the chat, you got to understand, guys, I'm doing my absolute best. It might be a little late than we want to. It might be a few seconds delayed before I can get to the chat, but we're going to do it. But yeah, I cleared the cache and I went to go open up my account, and my account's gone. I don't know where to find it. I can get it up on my phone here, which is really interesting. And then maybe I could, you know, pull it up on here. You know, I don't really know. We'll see. If I could pull it up on here, that would be great. But it's not even showing that I'm even on here. So yeah, that's I guess that's how it is. I'm gonna have to figure this out after the show. Of course, guys, remember tonight we have a Discord meeting. So after everything is all and said, we're going to take notes on old Papa Powell. We'll go over exactly what was said. So if you're not a part of the Discord, make sure you join the Discord. We are going to be going over a little bit of everything tonight. What's going on, Paul? It's good to see you. You got one share of Zap, Damn Yankee says. Good for you, brother. Let's hopefully it holds. I don't know where your average is, but you know, this is the play right here. We got a big push up right here on volume. It pulls back, consolidates, it starts creating new lower highs. It gets tight, surfing the 21-day moving average. And then bada bing, bada boom. We got volume. We'll see if it's going to pay us soon. I'd like to say, yeah, it's going to. I will say the spread has been off and on today. Right now, you got an 11-cent spread. I don't like seeing that so much, but, you know, it is what it is, you know. So if I can just figure out here, because I want to get these polls up, guys. Afternoon, gang. What's up, Jimmy? Good to see you, brother. 9:30? Yeah, that's a good price. I would, wait a sec, 9:30? Well, why'd you take it, would you take it yesterday? Come on, dude. Come on, dude. You're taking preemptive buys, damn Yankee. That's a no-no. That's a no-no. You're not skating away on that one. What's up, Nalani? It's good to see you, brother. Yeah, you're not skating away with that one, brother. We got an hour and 25 minutes till federal Powell comes out. But remember, at 2 o'clock, guys, at 2 o'clock, we have the Fed rate decision. And if we bring up the Fed rate decision here, we'll bring up the CME Fed tool. We are expected, guys, to keep the same at 5.5. We have a 97.9% chance to stay the same on the Fed rate tool. So if we get any difference, whether it's a rate hike or a rate cut, that is going to move the market. It's really going to move the needle on the market if anything like that happens. Now, I think that we are going to stay the same because 90% of the time, 97.9% of the time, it will stay the same. It will follow the CME Fed tool because it takes in and ingests all the data. It also, it's just a target probability rate, okay, for today. Now, September, it looks like we're looking at a rate cut. 89, almost 90% of the analysts, the target rate probability for this says that we are going to have a quarter of a rate cut. So yes, we have rate cuts incoming. It looks almost like 3 this year. But the question is this going to see through? Because this could all change. Now, with federal Powell coming out, you have to understand the most of the volatility is going to come out when he drops those Fed rate decisions. And that is going to be at 2 o'clock, okay? So it's 1:07 right now. We decided to hop in here, get a nice little early start, get everybody in the stream so we could hang out for a while we wait and see what happens. Now, with the S&P 500 hanging out up here, that's a really good sign. We're up above all the moving averages again, guys. We are up above all the moving averages again. So what we need to see now that we're up and above this, we want to see a follow-through day. So within the next 3 to 5 days, we'd love to see a push on volume higher than average to push this up to the north side. Maybe give us a nice little gap, and we can show you back here what that looks like right here. So we get a big push up, a big bounce off this area, and then we get a push up on higher than average volume the next day. That's your follow-through day, and this is usually what happens afterwards. We get a nice push that continues. So here we go. We pull back, we break below the 50-day, we start trailing on top of it, and then boom, we get a good push up above the 10 and 21-day moving average. Of course, I like when we're above the 21-day moving average because I can say, hey, we're risk on, but I'm still leery. I'm going to wait, and I would like to see a follow-through day before I really start buying things up. The only thing I am in is ASTH, which is close to its all-time highs. ASTS, Space Mobile Incorporated. It's looking really, really good here at these highs, but as you know, the last time we got up into this $19, $20 area, it sold off pretty hard. I am not closing out of this until it breaks that 10-day moving average. Now, that's part of my strategy. If you're not aware of that strategy and you want to have a strategy or a way of trading on your own, what you need to do is go into my swing trading school and also hit that like and subscribe so you see more content by me. That way you can see if this process is right for you. If it's not right for you, that's A-okay. Let's see, Yankee, yeah, Nalani, what's going on, Nalani? It's good to see you. Yankee says, the dice was calling my name. Well, if you're a gambler, bro, you're not going to last very long in this game. And I know that firsthand, man. I know that firsthand. There's been days where, you know, I let go of some of this discipline, man. And, you know, I'll work my ass off for 4 or 5 days, make a couple grand, and in one day I can give it all back, you know? So, you know, in a week, I can make a good couple of paychecks in a week. You know, I can make two, 3 paychecks sometimes even, and give it all back in one day. And that is discipline. Nalani says, if rate cuts announce, I'm all in SPY with RM though. You know, something I heard the other day, which I thought was really, really interesting. And hear this train of thought. Imagine if they do cut today. Wouldn't that be signaling that there's a bigger issue arising? You know, like Powell is in fear that something's going to happen. You know, if you really think about it, if all of a sudden he doesn't follow the plan and he doesn't cut in September, or he does cut in September, but he cuts early today, wouldn't that signal like there's a bigger issue that he needs to cut early, that he's not following the plan? So, you know, it could go either way. Of course, when the Feds cut and they cut early, a lot of us tend to think, yeah, they're cutting early. The market's going to go booming. It's going to go crazy. But I like to see both sides of it. I'm still on the same side as you, Nalani. I still think, yes, if the rate cut is announced, I think the overall market is to continue higher. That's generally and typically what we like to see. But there is that other bias. I like to see both sides so I don't get caught too far on one side, too far in my own head. And there is that bias that we could head lower because that's signaling a bigger issue in the overall market. But I personally think whether no matter if the FOMC comes out and they say Fed rates stay at 5.5%, I think the real interest is in when Fed Chair Powell comes out in less than an hour and 20 minutes. When he comes out in an hour and 20 minutes, when he starts speaking, we're going to be keeping very, very close attention. I'm going to take notes on this too, guys, so we don't miss a thing. But the real question is going to be if he's more hawkish or bullish. So if he comes out, he's going to say the same old thing. He's going to say, you know, we have the two mandatory. Our job is to keep interest rates. I'm sorry, not interest rates, but to keep inflation down to a 2% level. That's their main goal, and to keep jobs. Their mandate is to keep the jobs high. Okay. And so if we're starting to lose jobs, which the last piece of data that came out signaled that we are having job openings, like things are looking good still. So it's a good thing. I think everything's still going in the right path. If he still stays on that same path, though, that same talk that Powell always gives, I think we're still in good looks for September and December. By December, having 3 rate cuts. Okay, so we're going to see what he has to say, what happens there, but it should be very, very interesting. And that is going to be happening in less than an hour and 20 minutes. But the Fed rate cut is happening at 2, so we'll see what happens. ZAP looks like it's pulling back down. We'll see what happens. This should be interesting. ASTS still ripping higher. That's nice. Let's look at the S&P 500, guys. And if there's anything that you're watching, let me know. Dan has put in the watch here. If you guys take a little peeky gander, you'll see the link tree. Just click on that link tree. Go to site, and right here, YouTube, Discord, TradingView, Instagram, TikTok, Facebook, and Twitter. You guys can join each and every one of those, or whatever platform that you are on. We make it easy for you. Of course, the TradingView, and I should be bringing up TradingView. Why don't I have TradingView up? I'm using this. There we go. There's your friend ZAP. Here is the S&P 500, and here is our good friend, the IWM. Look at the IWM. It looks like it's breaking out of this trend here. It's still following a rising 10 and 21-day moving average. This is looking really nice for IWM. So a lot of people saying we're getting rotation. It does look like we are getting rotation as the Mag 7 stocks have pulled back. Looks like today they were doing a little bit better, but the IWM here still holding out very, very nicely. Now, if I could just find a stinking way, let's see, Google account, to get back in. I want to get those polls up and running, guys. So how about I play some lo-fi music? Let me know if this lo-fi is too loud for you. I want to play a little lo-fi for you while I try and get this all taken care of. Oh, that's why I couldn't log in. Let me get this all taken care of, guys. I'll be just a minute. Bring up the S&P 500. It's looking really good, above a 21 and a 10-day moving average. All right, finally getting logged back in here. All right. Wow, that could have been really silly. All right, that's looking better now, guys. Should be dark mode though. Let me know if this is too loud for you guys. Let's take a little peek. What's up, Adam? Good to see you, brother. Glad you're in here. You must be using a different account, Adam, because you have it, you should be as our moderator. Yeah. David's birthday, August 10th. Quit announcing it. I'm only kidding, man. Let's see. Nalani says he is so smart. He used same magic to repetitive words again and again and again today, too. Powell or myself? Probably me. I do repeat. I do repeat quite a bit. That is the truth. I am repetitive. Okay, you know what? Let's see if we got the polls back up and running now, guys. We'll see. Let's see here. Let me go to the studio. Maybe I should hit the old drum roll. Oh, all right. Let's see if we can get these up and running, shall we? Ladies and gentlemen, we want to make sure we can get these damn polls up and running, because I went through hell to get these things up and running. Let's see, baby. And here it is. Oh, yeah, baby. We are back in business. The polls are back up and running, baby. You can see it. It's right here. Oh, yeah, we can see it now, baby. Okay, okay. Calm down. It's going to be okay. Everything's going to be all right. Let's see. What kind of poll do we want to ask? Oh, man. That took me way too long, man. Okay, Powell. Nalani says Powell uses the same, and he does. He really does. He uses the same two words quite often. My dual mandate, jobs, and federal rate decision. Let's see. All right, so what's the question here? Will the SPY, also known as the S&P 500, will it hold above the 21-day moving average until end of the day? I think that's the best question, because we're always looking at, let's see. We're always looking at the S&P 500. So we want to see, will this S&P 500 hold the 21-day moving average till the end of the day? Because if it does hold, the S&P 500 does hold above that 21-day moving average after the FOMC meeting, I think we have a good chance at seeing a follow-through day the next day, or within the next 3 days, by the end of the week anyway. And if we see that, then we're risk on, baby. Then we can start taking trades again. We can start finding those trend and base breakouts. We can start finding what we need to play in the overall market. I can call my financial advisor again and say, hey, it's go time, baby. Get me back in the market. So the question is, will the SPY, the S&P 500, hold above the 21-day moving average till the end of day? We'll say yes, above, no, below, or we'll just say just here for the meeting. All right, you guys can vote on the poll now, because we got it up and running, baby. We are back. We are back, baby. It took me long enough, did it not? It took me forever to get that thing up and running. Goodness gracious. Holy guacamole, baby. We're back, though. We are back. No big deal. Oh, you can call me a boomer. You can call me what you will, but we got this back up and running, baby. All right, so Powell is going to be speaking at 2:30, but the FOMC, the Fed rate cut decision, happens very, very soon, in less than an hour, guys. It is 1:20 right now, so we got 40 minutes until that data gets dropped. While you are waiting, hit that like, hit that subscribe button. Will we stay above or below? That's the real question that we got going on here. Oh boy. Let's see the stream health. Always something going on. Always something going on, guys. Yeah, anybody that thinks that they can do the live streaming, you got to understand, it's hard to keep a big group like you. Beautiful, beautiful people entertain while running 3 different monitors and making sure we follow all the guidelines and rules. And one of them is stay focused, stay entertained, because we aren't just here for Papa Powell. I am trading, I'm doing live trading, I'm doing a live show. We're doing everything that is going on that you see in front of you right here, right now. And yes, if it looks a little different, it's because we're standing today, baby. It's a standing kind of day. We got to give the old Papa Powell a standing ovation when he comes, because I promise you this, not often do I get guests. Do I get guest speakers on here? Of course, we've had Covey. We've had Covey on. We've had Dan Bob on. But today, we have Papa Powell, and we welcome him graciously with his presence. Thank you so much for joining me, Papa Powell. I'm gonna practice the speech before he comes on. Oh, welcome, Papa. Oh, welcome, Papa Powell. Good to see ya. And when he gets here, I want you guys to go wild. I want you to go nuts for Papa Powell, because he has a hard enough job. I think my job's hard. I think it's hard to run a live stream, to deal with all these issues that are going on right now. No, absolutely not. Not for Powell. This is nothing compared to Powell. Dan Bob says, Miss David, do you have an earring in? Well, these are called gauges, okay? These are called gauges. I've had these things since I was like 16 years old. They're not earrings. Earrings are for girls. And these things are huge, okay? They're like rivets. We won't call them earrings or gauges. They're pop rivets, okay? Puts a big hole in your head. No, I'm not going bigger. That's always the first question. ISA1 Millie, what's up? Good to see you, good to see you. All right, guys, now that we got everything up and running and everything's looking a-okay, grande, baby. Let's go ahead and make sure. Oh yeah, things are looking good. I feel like I need more screens. Is that bad? I feel like I need even more screens. That's horrible. It really is. If you ever need a video, let's see here. What do you got? What's he got? Let me bring this back up. If you ever need a video on what not to do, I can show everyone my strategy. Yankee, I love it, dude. I love it. Let's take a look at ZAPP. Speaking of which, looks like we got a nice pullback. This is the issue right here with this, is this $11, $11.50 area. Between 11 and 11.50, this area right here is very, very hard for it to get through. And you can see multiple times it's came up to this 11.50 area and is pulled back hard. So we'll see if it wants to hold out there or not. I did just get an alert. Where did that alert go? Let's see. That's on my phone. Let's take a little peeky gander. We got KOSS. Uh-oh. KOSS, ladies and gentlemen. It looks like it's trying to gain a little bit of a push here. Let's take a look on the 5-minute, see what kind of volume. We're getting a little bit of a volume burst in this area right here. Let's see. Yeah, getting a little bit of a pop right here. So it's popping up, but it's right into all this resistance here. The volume is nothing like absurd. It's higher than average, sure, but it's nothing like dramatic. So we'd have to see this thing pop up a little bit more. It looks like we got some news on this. Let's see what's going on with KOSS stock for that's July 16th. That's old news. That is old news, Benzinga. So we'll see. We'll see what happens here. I'm going to reset the alert for above this area and we'll bring it back up again. And you know, I do this over and over and over again. Sometimes watching the thing just completely take off without me. So we'll see what happens there. But yeah, what's going on? What's going on, Yosef? Yeah, I got the alert, baby. We're in it. We're in it. Well, we're not in the stock, but we're in it to win it, baby. We're here to watch and see what happens. But yeah, KOSS, it's not doing too much right now. It's got a nice pop. Volume popped up, but I'm not so interested in this stock. Let's zoom back out, and I'll tell you guys why. You know, I want when I see a stock and I see, you know, a trend like this. This looks good. This looks sloppy. This looks more sloppy. This looks way worse. And I'll tell you guys why. When we look at the stocks that we like to trade here, this is NNE, big push up, a pullback, and it makes these pops back up. It bounces, right? Where KOSS is not really bouncing. So let me show you the daily. Look at this. It's not bouncing. It bounced a little. But when I see this, I much rather see something like this. It comes back down and it pops up here, down, gets tight, and then takes off here. Okay? That's what I want to see. All right. Now, am I always going to get what I want? No. And it might work out here. It really might. But when I look at things, I'm looking at NNE, where it bounces up, comes down, bounces up, touches, comes down, bounces up, touches, gets tight, and then rip tater chips, okay? We can look at LEDS right here. Bounce up, pulls back, bounces up, pulls back, it gets tight, and then it takes off. Look at this. Then it starts taking off, okay? Look at this. Beautiful, you know? So that's what I'm looking for. So I never really cared for KOSS. It's kind of a meh, you know, not the best looking stock, but it might work out. So we're gonna keep an eye on it. Same thing with ZAPP. I like it. It looks good. Actually, it looks better than I was picturing it. But big bounce up here, pulls back, bounces up, pulls back, and now is getting tight. I would have liked to see this bounce up a little bit higher and pull back before it got tight, but you can't argue with this. This is good price action. So, you know, I'm not arguing with this. This looks good. All right, what else we got in the chat here? Zamora, what's up, girl? It's good to see ya. We got YYY. Is that the ticker that you want me to look at, Zamora? I got nothing going on with YYY. This thing on the daily's trading sideways. B Stewie, your Powell pick is blocking charts. Oh no, what is that doing way over there? You know what it was is, yeah, thank you, B Stewie, I appreciate that. Yeah, I hope you guys, let me try and fix this really quick. The issue with this damn thing is every time I change something, it wants to change it as well. It wants to do whatever the hell it wants to, guys. I'm still figuring things out. There we go. Oh, I'll see you guys soon, okay? I'll just hang out right here. When it goes, I'll be there, guys. We have about 30 minutes until the Fed rate decision gets dropped, okay? We are here. We're out here. I'll be the first one. Yeah, Powell's blocking. Adam's got me. Get Powell off the screen. Hey, Powell. Hey, Powell's going to do whatever the hell he wants to do. All right, we can run through it, though, really quick, guys. If we look at KOSS, okay? KOSS, it's not that clean, okay? I thought it looked, you know, on the daily, I would say, yeah, you know, on the daily, back here, sure. It looked clean. I still would have liked to see this come up a little bit higher. Still want to see some more days. If it's sitting here, I'd want to see this. I would want to see after it pulls back here, it pops back up, down, and fill this void, showing that there's buyers and sellers that are getting tight. Where this here just shows that there are sellers, and anytime it pops up, it just gets hammered down. Now, I do like how tight it's getting. It looks really, really good, but you know, I think this thing, if it takes off, I mean, it takes off. It's got a base here, but then it's got overhead resistance here. It could work out, but it's not in RGS, you know, where you get this big push up, a pullback, and it gets tight on top of a 10-day moving average. It's not that pretty, all right? It's not NNE where it pops up, not that one. Although this one looks all right, it still wasn't my favorite. Okay, because you know you get this breakdown, and we never broke out, so we never actually took this trade. But this one here, this is the trade. Oops, not that. This right here, guys. Let me show you. Right here, that's the trade. That's what we're looking for. A big push up, a pullback, another bounce, pullback, a bounce, a pullback. It gets tight and it takes off. Okay, that's what we're looking for. ZAPP also looks very nice, as we just talked about. Oh, I don't know why I did that. There we go. There it is. It's looking good. It's looking good. I like it. You can see the charting platform here. We just pull this right on through. We slice through this area. If you got yourself a good area that you could buy in on this 5-minute candle, you can see the volume did come in on this trade. So it'd be nice. It'd be nice if this thing could really get to ripping and take off for everybody who is in it. All right, we'll see. Okay, that's twice. Zamora, you said why. I'll bring up why one more time. So this says Amplify High Income ETF. If we zoom out on this, this is the daily. You can see that we've been just trading sideways. So if you would have bought this thing, let's see. If you would have bought this thing last year, and right now you'd be break even. So this thing isn't going anywhere. The average daily range is only 0.56%. So, I mean, it's an ETF. You know, we could read about it. It's a mutual fund. Yeah, I really don't know what we want to talk about this. It's just a basket fund. Amplified high income. So, you know, I don't really know what this is following, but this isn't really an ETF I'd want to follow. It just constantly is going down. Where if you want to follow an ETF, I suggest you follow the S&P 500, the IWM, the QQQs, and if you're into mid caps, FDY or MDY. Okay. So currently right now, MDY is getting ready to break new all-time highs, where IWM is also in that same boat. Okay, this is beautiful, guys. This is beautiful. This is what you want to see for breadth in the market. And speaking of breadth in the market, if we look at SPY, you can see SPY here, big push up, a pullback, now is above the 10 and 21-day moving averages. The question really is, and that's what we have on the poll right now, will the SPY, the S&P 500, hold above the 21-day moving average till the end of day? 67% of you say yes and 33% say no. So I like seeing that there's a difference here. I like seeing that some of you think it's going to work out, some of you don't, but we will see very, very soon. So let's keep on keeping on. Let's see what the RS rating on Myra is. So let's see here. The average daily range is 38%. The RS rating is 98%. 98%. So it's still holding out. Myra's still looking good. This is the kind of thing I'm telling you guys about. Big push up, a big pullback. It pops back up. And it's staying within this trending pattern, now getting really, really tight. If you guys remember when I brought this up in the Discord, let me just bring it up really quick for you. So we have Myra yesterday. Of course, I posted the same thing as I did the day before. And the whole thing was 2 days ago. I said, this is my main watch unless it gets some alert firing. Looks beautiful on the 1 and 5 minute. But right here, I am willing to take this on volume. Nice structure with new higher lows, lower highs. But I think I said that I wanted it to get tighter. That's the thing. So I've been watching Myra for a while now. At least I could have swore I said something about Myra needing a couple of days. But yeah, a couple days would have been nice, and now we've got those couple of days. I've been talking about this since here. We got this yesterday. Now we're getting tight. So if it can close here, I think tomorrow is going to be the absolute best. Tomorrow will be the best. If it breaks out today, so be it. So be it. I'll take it. But I really think tomorrow is going to be the day that we're really going to want to look at this thing. Okay, let's take a look at it on the hourly. It looks a little cleaner. You can see big push up, a pullback, pops right back into that area, pulls back, and then starts to trail sideways, getting really, really tight. Okay. A cash. I'm out of the market since 2 weeks. I think it's time to load again. Yeah, you might be right, Akash. Akish also says, bro, I've been following channel since a few weeks now. Hell yeah, brother. No, it's good to see you back in here, man. I know you pop in every once in a while. It's good to see you, man. And I'm glad that you got out. I wonder if you got out due to my rules. I mean, I don't know what your rules are, but my rules are when we break this 21-day moving average, we are out. And as you guys if you guys remember, I was out here. I called my financial advisor. I got over $250,000 pulled right out, just pulled it right out of the account. I said, I don't want anything to do with that. Pulled it out. I was done. Same thing with my trades. Even my long term, I pulled everything out. I did not like this pullback. When we popped back up here, I gave him a call. I said, I'm back in, but if we close out below, I'm out. And sure enough, before market open, he had me all out. All out. It was a beautiful thing. I have missed all of this. I have completely missed all of these issues here. Now we're above a 21-day moving average, but as Covey and I like to keep a close eye on, that is a follow-through day. And right now we've popped up on lower volume. Now we have the rest of the day until, and of course, Power Hour and Powell coming out. There's a lot of great things that are going to be happening very, very soon. Hey, what's going on, guys? Once he comes out and we spit this volatility, we get past these Fed rate decisions, it's going to be very interesting to see where the S&P 500 lies. If by the end of the day we can stay above a 21-day moving average, and tomorrow we can actually get some volatility higher than average, we'll see that follow-through day, and then I think it'll be very advantageous for us to look in the overall market for those trend and base breakouts. Okay, guys, so we'll see very, very soon if that's what's going to happen. And if you are just joining me, welcome, ladies and gentlemen. Do me a quick favor while you are here. Hit that like, hit that subscribe button. We are going to have an amazing show for you tonight, but make sure of all things you click that live button. You want to click this live button right here so that way you are up to date, so that way you are with me live right here, right now, so that way when Powell comes out and the Fed rate decision gets dropped, you know for an absolute fact you are hearing it first here now. Okay. Trade-wise, why do you do a financial advisor? You obviously know what's up. Well, that's a really good question, and I have a very, very good answer for that. Okay. I have a small account right now that I'm playing with. Okay. I am totally fine with working with my small account and building this small account. Okay. This small account right now, I have roughly between $32,000, $33,000 in it, give or take. I could take a look right now. It's right around $33,000 right now. My whole goal with my small account is to make this a big account and beat my financial advisor. Lately, I have been beating my financial advisor, so that's great. But when you look at the bigger picture of things, okay, the overall picture of things, that is a lot of money, okay? I could technically live off of that money right now for as low as my spending is, okay? I'm not one of those gurus who are trying to act like that I got some Lambo out there. No, I drive a 2006, I believe it is. No, 2016 Chevy Silverado, okay? I use it to haul rock and pull my trailer, okay? I'm a man, all right? I use it to pull landscaping equipment to go make a little extra money here and there, okay? And why do I do that? Because I don't want the things that I own to force me to work. So you might feel like a lot of these people own things, but really they end up owning you. That's the issue here. They own you. So what do? I have a huge chunk of money. I give it to my financial advisor, and then I just let him know whether I want to be in the market or I want to be out of the market, okay? David, why didn't you send your Cybertruck for B, Stewie, and I? Hey, dude, I thought you wanted to ride in the Lambo today, bro. Oh, man. Yeah, I actually have that sitting on top of my microwave in the kitchen. It looks really, really cool. I was thinking either it sits on the refrigerator or it sits on the microwave so I can see it every time I pass. Because I think some people were referring to your Cybertruck because it looks like a refrigerator or a microwave. So I like having it in there because it reminds me of all that. But yeah, the thing's sweet, man. I really would love to have a Cybertruck one day, but you know, spending that money on a Cybertruck, $100,000, holy guacamole. Because you know I'd have to get the four-wheel drive. I'd have to get all that good stuff. But yeah, and I looked it up too. I could show you. Here, I'll just bring it up right here. Let's see. I'll show you guys. Bam. Right here. Oh yeah. Order now. Let me just show you. Right here, for $57,000, you can get the basic, or if you scroll down here, you can get the Cyber Beast. All right, 320 miles of range, 0 to 60 in 2.6 seconds, 845 horsepower, over 10,000 foot-pounds of torque, 11 pounds of towing capacity. Let's see, what else does it say on here? You'll have to pay $250 today. $96,000. This also gets you that four-wheel drive as well, or all-wheel drive, I should say. That's what they're calling it. So yeah, it's pretty cool. I like it a lot. It's very, very cool. But you know, it's not for me. I mean, it is for me. It is for me. I would love to have that and their four-wheeler and their pull behind. But you know, I don't want to spend the money on that. I don't. I'd rather put that $100,000 into a bank account and continue living off the interest or the dividends and all that good stuff. Right now, my dividends, I just re-roll into it. But like I said, I let my financial advisor take care of all that, and I live very frugal, very easy. I only buy the things that I need to afford, and I don't want to afford anything else, because eventually what'll happen, guys, is the things that you own will own you. You'll have to continue working to pay those, and you won't feel like you can take any time off. Right now, dude, I stream, I trade, and I work some side jobs here and there to pay some of my living expenses. It's that easy, you know? Let's see, TradeWise says, cool. I have a large amount in Robo Invest, but always think, why am I doing that? I can just put into ETS myself, but like you, I'm using it a little bit as litmus. Very cool. Might have to look up that word though. All right, so it looks like the S&P 500 just went red on the red to green area. So where it opened up today, it went red to green. So it looks like we're pulling back. We have a big gap here from the overnight. Will this fill that gap? That's a really good question. Right now, we have 67% of you saying yes, we will stay above the 21-day moving average, as to 33% of you say no, we will head below the 21-day moving average. And if you look right here, we are literally lingering like some bad breath right above that 21-day moving average. So it should be very, very interesting to see. Now, in about 15 minutes, we are getting a data drop. What is that data drop? The Fed rate decision is going to be dropping very, very soon. So please pay attention. Stay very, very focused on this. Your red browser makes me hungry. What does it make you hungry for, Dan Bob? That's the question. And what are you guys watching? Are you guys watching anything? We could go through the overall mag stocks. So we're looking at the S&P 500. Let's look at NVIDIA today. So NVIDIA had a nice push up overnight. Nice push up. We had this big sell-off yesterday, if you guys weren't there for that. And then overnight it popped right back up. It followed up with AMD, but AMD did not hold these gains today. Look at this. AMD popped up here, hit that 200-day moving average, and like my grandma has always said, nothing good happens below that 200-day moving average. And sure enough, we popped up into that 200-day moving average, and then it came right back down. We're gonna bring this, come on down here, guys. I feel like taking a city squat. All right, can you see the timer, or is my face in the way? We can do that. That probably looks better there. We'll see. We'll see how that looks. But yeah, AMD had a nice pop up here, and then it sold off very, very hard, very fast. Look at this, a big pop up on earnings, right into its 200-day moving average, and then just sold off very, very hard. So crazy. Oh, it makes you hungry psychologically? Very cool. Papa Powell is coming out very soon, 46 minutes, but the data is dropping in 15, so please pay attention, guys. This can get really wild really, really quick. All right, so here's the S&P 500 pulling back under VWAP now. The IWM, let's see how it's holding out. Still holding out very, very well. As you can see on the daily here, the IWM is looking like we have a base at 225. 225 area is its base as it's holding this 10-day moving average to the north side. This looks really good, guys. We might get a nice breakout on that. Let's take a look at ASTS. It looks like ASTS, this is the stock that I'm in, guys. It's the only trade that I'm currently in right now. ASTS is trying to make new highs for the day. Its all-time highs are just above that at, let's see, what's the all-time high? 2037. We took this trend breakout all the way down here. It was a beautiful, beautiful move, guys. Beautiful move. You gotta love to see that. All right, old Papa Powell, let's go. Let's do this. We got 15 minutes until the data drops, guys. Can you hear the lo-fi music? Let me know. Yeah, POWL. Let's take a look. Yeah, this thing was nuts. I didn't really care for the spread that was on it. I mean, it did have continuation, earnings continuation. If you were to take this on the 1 minute, let's take a look. You could have got it right here. I watched this happen. I watched it break out of this area. I couldn't take it. Not with the spread, but it looks good. You know, it's looking good. It just made new all-time highs. Not all-time highs, but daily highs. So it's working out. It's looking good, but this one was a hard take. Like you said, B. Stewie, the spread. You know, it's close to $1 spread. Actually, it's over $1 spread, isn't it? Yeah, over $1 spread on this. That's hard to take. That's hard to take. It's hard to get a good price when you get $1 spread there. Let's go over the rest of the Mag 7. So we got NVIDIA popping up. It's above anchor, or it's above VWAP right now. We got Tesla here, just trading sideways, trying to hold above that 21-day moving average. It broke down below it. I don't know what's going to happen here. We got kind of this downtrend. Let's take a little peek. You know, keeps popping up through it and then getting pooped on. See what happens there. Microsoft had a big sell-off, and then it popped back up. So let's see. I'm going to put this on the hourly here so we can see more of what's going on. So Microsoft had a big sell-off, and then it popped right back up to where it was. You know, it'd be interesting to see what happens for Microsoft. Let me move this. This thing is getting annoying. Let's see what it does here. Netflix, NFLX. I was keeping an eye on this thing for a while. We had this huge base here, and I found it interesting when it came back down into this base right in this area, it just flushed through. It didn't really hold this area at all, which I thought was really, really bad for Netflix. So you might start seeing the stage 4 right here. This being the stage 3, this might be the stage 4, you know? And if it is, then this thing's going to go down pretty fast. It held out pretty well for a while, but it's below all of its moving average as well, so it's losing its momentum. AMZN has earnings coming out here in just a couple of days. Just a couple of days for AMZN. We also have Google. Google came out with its earnings and flunked. This thing failed, had a nice pop back up here, bounced off the 10-day moving average. It looks like it's headed lower. Meta has earnings, I think that's today in the after hours. Let's see. Yeah. Aftermarket. Meta's coming out. All right, we got the data's dropping here in about 10 minutes, guys. 10 minutes until this data drops. 10 minutes till the data drops. This here is for the speech. The Fed Chair Powell is coming out in 41 minutes for the speech, but the data is getting dropped here very, very soon. We got 10 minutes, guys, until we find out if Fed interest rates stay. Now, we know with the CME Fed tool that the rates are most likely to stay. There's 97.9% chance that we are going to have a rate stay at 5.5. Now, if anything changes here, you're going to see things get very volatile. And personally, I think even when it does come out, things are going to be very volatile regardless. Things are going to get very, very volatile. So do keep that in mind. All right, guys. So that's coming out very, very soon. 10 minutes. 10 minutes till that comes out. And we're going to watch it right here. We're going to watch the S&P 500 and exactly what happens when it does. It always is interesting to see when you get data dropping. Of course, at 8:30, we get data that drops all the time, sometimes 10 o'clock. And then, of course, when you get the FOMC meeting, it's very volatile. But the data dropping for those Fed rate cuts, everybody tunes into this. Everybody likes to keep a close eye on this. All right, where were we? Let's take a look at Apple. Apple's earnings is in 1 day. And it looks like Apple's holding out better than the rest of the Mag 7. It's still above a rising 50-day moving average. It's above its 10 and 21-day moving average, and those moving averages are starting to flatten now. So if Apple can hold out, we're going to see what its earnings has in store for us. If you guys remember the last time it had earnings, we had a big gap up here, and then it continued to push higher and just pushed and pushed and pushed. I mean, we were all the way down here at 172, and now it's created a new all-time high at 237. So AAPL just absolutely annihilated last earnings. Let's see if they can do it again tomorrow. All right. We got data 9 minutes, guys. I hope you guys are excited. I am pumped. It's going to be very interesting. Of course, always is when the data gets dropped. And when the data does get dropped, we'll definitely have up the S&P 500, so that way we can see exactly what it does. We'll put it on a little bit more volatile, like a 5 minute here, so you guys can see exactly what's going on. And now that I see that we got quite a few people in here, go ahead and hit that like and subscribe button. But most of all, hit this live button right here, guys. You need to make sure that you stay live. Click this live button. If you're all the way back here, what you need to do is you click this live button. It brings you up to the time at hand, exactly where you need to be. Hit that like, hit that subscribe button. I'll even refresh this really quick, people, so we can see. Go ahead and hit that like and subscribe button with the likes. It looks like we're up to 12 likes. Don't mean to blind you. Just changed my my thing here, but hit that like, hit that subscribe button, guys. Let's make sure that we are caught up to date, so that way when the Fed rate does drop, you guys are right here, right now. You are ready and willing. And then, of course, we will be streaming the FOMC meeting. That comes out in less than 38 minutes, more like 36, 37 minutes, guys. So keep that in mind. The data is coming out very, very soon. I'm getting excited. The S&P 500 is holding above VWAP now at 550.48. Dan, Bob, if you'll do me a huge favor, remind me to turn off that lo-fi music when Papa Powell starts to chat. Let's take a look at ASTS and ZAP. ASTS, new high of the days. ZAP looks like it's getting really tight here, heading sideways here. I'd love to see this thing break out and get above. That'd be nice. Ooh. Ooh, goodness. Lost more money on ZAP than I thought. Oh well. ASTS, there we go. Will ASTS make new high of all-time highs? 2037 is the all-time highs. We're sitting at $20 bill right now. Let's see if it wants to or not. Let's take a look at NVIDIA. I had this NVIDIA marked out as this top right here at 116. The reason why I said that, let me clear all these out. Let me clear this drawing set out here. You guys can see right here, if we look at the daily on NVDA, you can see if we just draw a line right through here, I'll show you, right through here, all right, you can see we've hit once, twice, 3 times, 4, and now this 5th time it's hit. You can count these as well because we're within $1, I'd say 50 cents. And now it's ran right into this area of resistance once again. Huge pop up off these lows. So we had a huge push down yesterday on NVIDIA, and then a huge rubber band effect where it ripped right back up here to this 116.50 area. So then if we zoom in on the 5 minute, I was really thinking about taking a short on this right here. Look at this. See how it came up, barely touched it, pulled back, came up, pulled back, came up, and now it's making new higher lows. To me, that's a discerning factor that this thing is going to head lower. So we'll see what happens with NVIDIA. As the data is coming out in 5 minutes, guys, 5 minutes. Thank you so much for tuning in. My name is David Worrell. We have an amazing community here. You guys are more than welcome to join it. We have Discord meetings almost every night. If you want to learn a process and how to trade, and we can show you our process. It might not be the right process for you. It is a swing trading process. And if you guys want to learn how to do that, hit that like, hit that subscribe button, join the Discord. You have it all set up right there in the link tree. Dan, Bob, Dan, the greatest moderator live, has posted that for you in the comment section. So we'll see you guys very, very soon in there, baby. Let's go. All right, so the S&P 500 popping up above that VWAP area, just trading sideways all day today, kind of as we expected. Did not expect this big of a pop in the pre-market, but of course it getting rip tater chipped up here to the north side at 550.59. Just been trading sideways for most of the day. We're going to see when the Fed drops these rate decision, what happens. Of course, we're going to get volatility coming in the market very, very quickly. We're going to see if that volatility heads to one way rather than the other. And if it does, we will be here to talk about it. And of course, with the FOMC meeting coming out in roughly 30 minutes, that is also going to have a lot of expected volatility. A few more minutes, guys, just a few more minutes. NVIDIA, Tesla has this downtrend on the daily time frame, as you guys can see here on the bottom. Microsoft just trading sideways today as well after a big sell-off on its earnings. Netflix, a big pullback today after hitting that resistance area of 132.50. AMZN has earnings coming out very, very soon. Google also pulling back today. Let's take a look at the RSP before the data drops, guys. We just got a few more minutes. The RSP is looking really good. New all-time highs for the equally weighted S&P 500. What about the QQQs? The QQ equally weighted, so the QQEW, no, QQEW, right? Yeah, there we go. This is the NASDAQ equally weighted. S&P 500, 550.21, guys. Okay, here we go. ANET, it's been a while since I looked at ANET. We can take a little peeky gander. So ANET only moves 3.3%. Looks like they did well on their earnings. They're above all their daily moving averages. So it's looking good, but it's just a slower mover. So we'll have to see what happens with that. Good eye trade wise. All right, guys, here we go. We got about 1 minute. You're going to see it in the S&P 500 before I could even read it off. I promise you that. We are going to blow this up so you guys can see the volatility as it comes out. You're going to see this, though, before the data even drops. You're going to see the volatility in this. I'll bring up the live news on the bottom here so we can be the first ones to see it. And I'll read it out to you as quick as I possibly can. Welcome if you're just joining me. The data is getting dropped here in just 1 minute. Thank you so much for joining me. Hit that like and that subscribe. Powell will be coming out in less than 30 minutes, guys. 30 minutes. Powell comes out to speak about these Fed rate cuts. All right, maybe we rise up. We're going to bring the table up here. We're going to stand now. Let's do this, guys. Come on up here. Let's come up here with me. All right, data's dropping, baby. We got 19 in here. Make sure you vote. Will the S&P 500 stay above the 21-day moving average by the end of the day, or will it drop below? We're going to see very, very soon as the data is getting ready to, as the Beastie Boys would say, drop. We're going to see here. Drum roll, please. Looks like we're going to pull back here. S&P 500, we're breaking below VWAP. right, come on, let's go. Drop that baby. Drop it like it's hot. Here we go. Fed leads key overnight interest rates unchanged. Okay, it's unchanged, guys. We're staying at 5.5%, looking very, very good. Everything's looking good. Yeah, no sleep till Brooklyn, baby. Okay, so because they came out unchanged, we are staying at 5.5%. Now September is going to be the next day that we change here. You can see the S&P 500 has not had a ton of volatility. It means that everyone has priced this out as deemed necessary, as deemed fit. So this looks good. You can see we are getting some volatility in here. It's not gone absolutely bonkers like I expected it, but that's a-okay. We got Papa Powell coming out in about 30 minutes to talk about these Fed rate changes, Fed rate stays, and he will show us whether or not he is hawkish or dovish on this whole situation. So that is good. It is good that we aren't getting anything crazy. Now, next month, which is September, we have an 89, almost a 90% chance that we will be coming down a quarter of a rate hike. Okay, so that's really, really good for the overall market in general anyway. So what did you guys think? Did you guys, everything fare well with that? Good afternoon. What's going on, Muley? Is that awesome art? Did you just change your name? Mugli Art? Or is that somebody new? Mugli Art, are you our awesome art friend that's in our Discord? Or have you changed your name and picture? That's what I need to know. That's what I want to know. AMD, what a crazy move down that this had today. After a huge push up on its earnings here, you guys can see a huge push up here and then a pullback. The Fed speech, yes, the Fed speech right here will be coming out very, very soon, guys. Very, very soon. Old Papa Powell will be coming out very, very soon. We can move Papa Powell out of the way. Whoop, we don't want to do that. Move Powell out of the way here just for now. And we can put this up here just so that way you guys can see everything. Put it right here. Okay, that's you. Good, 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 good. Oh, you got another account? Well, cool. Good for you. Hit that like and subscribe, girl. Let's see, ASTS. Yeah, we're trying to get above there. We're trying to get above there. I think there's just one of you guys holding this with me. Is NVIDIA going to pull back on that? Looks like NVIDIA is still holding strong up here, which is very surprising. I really expected a big pullback on that. Unchanged. Full statement right here, it is unchanged. Fed repeat does not expect it will be appropriate to lower rates until it has gained a greater confidence of inflation is moving sustainably towards 2%. I really don't know what else they need. I mean, he said it himself that inflation is coming down. Thoughts on the Russell? Be happy to go over the Russell. So here's the IWM, and it looked like it had a nice pullback there. It's bouncing off that VWAP area, but what we really want to see is this daily. So we always want to zoom out. Even if we see a big bounce or a mix of volatility during the intraday, we always want to zoom out to here. And you can see right here, if we look at the IWM, look at this. We have an area of 1, 2, 3, 4, 5, 6. We're sitting right at this breakout area. That's 225.40. If it can break from this area to the north side, I think we can head higher. We are also holding a 10-day moving average. If I did not know that this was the IWM, the Russell 2000, I would say this is a beautiful looking base breakout. This is something I would love to trade. Now, I do have my financial advisor. I have 20% of my account. So most of my account, I would say 80% of my account right now is in cash. Okay, I have no trades out there, but I did tell him I do want to have some money in the IWM, and this is the most I've ever had in IWM. Somewhere around this day right here, I ended up getting in for the whole reason is, I just did one of these and I seen it break this kind of trend, and I called him and I said, how much have I ever had in the IWM? He said about 5%. So I asked him to add into around 20% of my account. So 20% of my account is actually in the small cap So the IWM is looking really, really good. Now, of course, we have this overhead resistance. It's obvious that we're going to have a little bit of chop in this area, but of course, if it can get through there, it's going to look even better. This big push up higher on much higher volume with a follow through day is great for IWM. If this thing can continue higher, this momentum is going to be beautiful. Ronnie Little, what's going on, man? It's good to see you. I hope that was a good enough analysis for you, my good friend, Mr. Little. S&P 500 now holding well above the 21-day moving average, looking very, very good here. Look at that. How about gold? Let's take a look at gold. So here's the gold ETF. You can see the gold ETF is holding out very, very well. I don't know if you guys were with me, but I called this beautiful play out right here. You see this top 1, 2, we can call this 3, 4, 5 different spots right here. I actually called this gold play out a long time ago, guys, long time ago. And then actually a lot of you guys were with me here. And then we had a pullback that I missed. This was the pullback. So we couldn't get in here. I missed this trade here. It pulled back. It created this trend line. And then I thought, hey guys, this right here would be beautiful. We got to wait and see. And then sure enough, this thing took off. Rip tater chip without us. But, we were looking at a few different stocks that would have been nice. But yeah, gold's looking really good. We got a base top right here as well. You can see just like that. Now, can it get through this? I don't know. This thing looks like it's following its moving averages. That's above all of its moving averages. It's looking a lot better than the QQQ, that's for sure. Yeah, inflation data ignores many things like gas and food. That is very, very true. So I see you guys smashing that love and that 100. I appreciate you. Nothing but love coming right back to you. Nothing but love, baby. Oh, yeah, love. Yeah, for a long time, guys, we've been looking at this S&P 500. That pullback was scary. It was dark. It was a little twisted. But now that we look at this S&P 500, you can see we're getting above this head and shoulders type pattern here. That's a good sign. We want to just make sure when Fed Chair Powell comes out here, he doesn't drop that bomb. We don't want to see him doing anything crazy or stupid on the microphone, which we have seen him do in the past. He drops that microphone. If you guys haven't watched that YouTube video, you guys really should see that YouTube short. It's absolutely hilarious. Him dropping the mic. Oh, it's one of my favorites. It's definitely one of my favorites. Kind of want to play it. Kind of want to play it for you. Maybe we do play it. We just posted it in here. If you guys haven't joined the Discord yet, I don't know what you're waiting for. We're going to have a meeting tonight as well. This right here is the video. I can just play this right here for you. Look at that. This might be Powell when he comes out today.
Good afternoon.
Oh, we don't want that. We don't want that, do we, guys? We don't want to see some crazy stuff happen with him coming out. If you guys haven't hit that like and subscribe, please do. We always give you guys the best possible content. We really do. We try and bring it to you. We try to bring it to you live. We also bring all the data out to your sweet, sweet ears. So if you're interested in the volatility, in the data, in the FOMC meetings, in bringing all the cut up, the cut up when we do this the interest rate decision and he comes out and he talks about it, we cut these things up into little splices. Even when he's on Capitol Hill, those are my favorite. We splice those up, we put them in your sweet, sweet ears so that way you can watch exactly what's going on without having to sit here through the whole meeting. But if you are here, it's because you love this market just as much as I do. So we're going to see what happens here with Papa Powell coming out in less than 20 minutes now, guys. This should be a very, very good day. Of course, we're going to take notes. We're going to see what old Papa Powell has to say about the state of the economy. Of course, he's going to say, well, I don't answer questions like that. This is all I have to say. We only have a dual mandate, and that's to keep high jobs and lower interest rates after the inflation comes down to a more concerning when it comes down to 2%. We want to see that all the data is showing that we're coming down to that 2%. And if he's going to keep it on saying that same old sweet, sweet song, well, then I think we are going to end up with a soft landing. What do you guys think about the soft landing? That's the real question. Do you guys believe in a soft landing? I think so far he's doing good. We got a poll in the chat as well. It says, will the SPY, the S&P 500, hold above the 21-day moving average till the end of the day? 68% of you say yes, we are, and 26% say no, we're going to go below. 5% of you say you're just here for the meeting. Well, the meeting starts in less than 20 minutes, so I'm glad you are here for that. But if not, well, you are waiting. If you haven't already, make sure you vote on that poll. Dan Bob Dan has also posted the link tree in our Discord. I'm sorry, not our Discord, but in the chat. You can go down through this. If you guys haven't already yet, click on this trading view. If you go to trading view, you'll have a nice little pop-up here. You guys can join now for absolutely free. If you use my link right here, it's gonna give you $15 off if you end up deciding to sign up and pay for it. It's actually a free trading platform. I love to use it. We use it a lot, especially for anchored VWAP, which we'll be going over tonight. If you guys want to, it gives me a little kickback if you end up signing up for it, but you don't have to sign up. It's absolutely free. We got less than 20 minutes till Papa Powell comes out. We have the S&P 500 trading at 550.64 right now. The IWM devastating the overall markets as it's holding above those 10-day moving average. Well, the QQQ took a huge hit below all moving averages as the majority of those moving averages are heading to the sell side. Now it's trying to get up and above that 10-day moving average. We're going to see what it wants to do as NVDA had a huge sell-off this past week and now tries to pop back up right into a resistance area. We'll go ahead and zoom in on this to see where it sits. As you can see, we're in between an area of resistance and the VWAP area. So we'll see very soon. We're gonna sit back down though while we wait on old Papa Powell, my guest speaker, your friend, our fan. We're gonna see if he wants to come back out here and give a little chat. And I always like to bring up the CME Fed tool. I always like to refresh this because the thing is, guys, of course, we got the the probability rate of today. It's obviously 99. They already came out with it. September, you can see 95% that we're going to have that rate cut. I think the real question in the poll, and I think we're going to change the poll. We're going to change the poll. We're going to see what you guys think. And is everything running smooth so far in the chat here? Is everything running smooth? Let me know. Let me know if everything's running smooth. I hope it is for you. Let's see here. Stream's looking healthy. Everything's looking good. All right, that's good. Let's take a look at Zap. See how Zap's doing. Still trading sideways. Got zapped down a little bit. This thing was nice right here. I didn't like how it was trading. This thing popped up. I liked the volume. I ended up getting into this thing and then it pulled back. I didn't like the pullback. I exited out of this thing. It was just kind of chopping around here. When I get into something, I want to see it take off. Just like if you were to get into it here, it just trades sideways here. Boring, then it takes off, doing the same thing again. So is this thing gonna keep on ripping? Well, the only issue we have here is it has some resistance here at 11 and 1150. In this area, that's its biggest area of resistance. So I'd like to see it really get above this area and start taking off. That would be very nice. Let's hope it can do that for the people that are in it. Jimmy Bright says, yes, you do believe in it. Yeah, I do too, man. I'd really like to see a soft landing happen. I think this is a little different than the last time we had to increase rates this high. He had to do it so fast, so hard. This time he brought up the interest rates and he held them there, and he held them there for a really long time, and he's never reacted too much to really good or really bad data. He's just held them there. So I think he's gonna slowly take them off. And also, if you look at the CME Fed tool, if you look at the CME Fed tool, you'll also see, guys, that if we look way out, September of next year, you'll see that the interest rates are starting to go back to normal. They're starting to, but obviously this is so far out that you can't really trust it. But it's nice to see. It's nice to see. But if he does things in a gradual pace, that might be really good for the overall market. 16 minutes now, guys. 16 minutes. You don't have to listen to me anymore. You can listen to our good friend, Papa Powell. I'd really like to see NVIDIA do what I anticipated here. AMD, this might be the soak here. This is the 5 minute. This is, you know, these big wicks here, these big buy-ups here. That's not people like you and me, guys. Let's see. Damn Yankee says, Dan Bob guessing it ignores groceries too. Yeah, gas and food. Groceries are outlandish right now. It'd be kind of cool to see price of eggs last year to this year. Oh, this is adjusted for inflation. This is what I got on this. So here's 1995 is what? I don't want to adjust it for inflation. I want to know what they were and what they are now. Let's take a look at ASTS. There we go. New all-time highs for ASTS. Congratulations to anybody who's still holding this with me. This is a really good trade here. We're up about $520 on this last quarter. I sold another quarter today, so I'm only holding 1 quarter left. So I made quite a bit of money on this trade. This is beautiful. Really, really like it. We're gonna see what happens though. Of course, with the S&P 500 being above a 21-day moving average, I'm almost risk back on. I just want to wait for a follow-through day on volume. If we can get that, that would be really, really nice. I don't want to miss any of it, you know? Nobody does. But, ooh, you know what? Before he comes out, let's take a look at the VIX Volatility Index. Looks like the volatility is starting to head lower, so that's good. It's showing that there's less fear in the overall market. Of course, there are many, many things that we could be fearful for, but you can see the overall market had this big trade up on volatility and then started to sell off, so that's nice to see. Old Uncle Tesla is being bound by its trend line to the sell side. Microsoft just trading sideways before this. Netflix getting a bounce off these lows here, off of its daily lows. We'll see if it wants to hold out. AMZN has earnings coming out tomorrow. Google, the Goog, looks like it's trying to bounce off the lows there, still below VWAP. Meta has earnings after hours today. That should be interesting, guys. Remember the last time it had earnings? Let's just zoom out here and take a little peeky gander. It bounced up. It bounced up 2 earnings ago. Big push higher, traded sideways. Then a big push down lower, and then ramped all the way back up, made new all-time highs, and now it's back down in its traded area. It's sitting at 473.14 right now. We're going to see what happens after earnings. This should be very interesting. You know, these Mag 7 stocks really like to move the overall market, and you can see that right here if we look at the stock heat map. When you look at something like this, you'll see, you know, Apple, you got your Apple, your NVIDIA, your 2 biggest stocks, then you got Google, Meta, and Microsoft. These things are very, very big. It's hard to see because my big head's in the way, but right down here you got Google, Microsoft, and Meta, all this big traded area. So when these things move, they move the market, okay? So we might be looking really, really good above a 21-day moving average, but if Meta comes out and the market does not like where Meta sits, you're gonna see the overall market sell off and sell off hard. So we'll see what the overall market wants to do there, as the S&P 500 is now trading at 551.19. 551.19, that looks really good. I like it. I like it a lot. Here is on the 5 minute time frame. We're trying to get to new all-time highs for the day. We'll see what happens there. Speech is happening in about 10 minutes, guys. Less than 10 minutes. We will have it here for you. Here now. Yeah, guys, back to like kind of living below my needs, or my means, I should say, instead of getting, fancy cars or anything like that. With the house paid off, no credit card bills, no car payments, no nothing like that. To me, it's the biggest relief that I don't have to go to work every single day, that I'm not bound by bills. It's very relieving, and I think everybody should want to get to that. It's almost like retirement status, where you can just live off the fruits of your labor, right? Now, I still work. I still do some side jobs. I still do things that I can. But I found out after I busted my knee and my feet up that, I don't have to go to work and make $1,000 every single week. I don't need to do all that. I can just focus on my trading, make my money here, focus on, making sure I have a good retirement for my future family and myself. And then making a little bit of side money here and there, just pay the bills, make sure the family's fed. I always got the option. I can always go back, make $1,000 a week, but I mean, at what cost? You're really ruining your back, your feet, your everything, So it's nice to be able to sit back, relax, do the things that you love to do. Doing this live stream is one of them. Absolutely love being here with you guys. So this is awesome. And then I'm heading back to jiu-jitsu. I had to take a month off jiu-jitsu to let my feet and my knee heal, but we're going back to jiu-jitsu in August, baby. So that's going to be really good. Daddy's got to lose some weight. I packed down a couple of pounds sitting here, not doing much. So it's going to be good to go back, kick some ass, take some names, maybe do a few tournaments. But we got about 8 minutes, guys. 8 minutes left, and we have Papa Powell coming out. We got him right here. He's chilling right here. It won't be long, guys. Oh, Papa Powell. Let's take a little peeky gander at Powell. Let's see how he's doing, huh? Let's see how Papa Powell's doing. Oh, not that. Oh, my gosh. Shaking the whole screen on you guys. My bad. There he is. Oh, hello there. Oh, Papa Powell, he'll be out here very, very soon. David, had a feeling freedom is much better than having fancy things to show off for sure. I haven't worked a regular job since the end of 2020. Yeah, congratulations, brother. Yeah, no, I mean, I could go out. I could go pay for a Cybertruck in cash right now. And I've honestly thought about it, because I think it would make the YouTube show even cooler if I had a Cybertruck sitting behind me. I was gonna go out in my barn. I got a nice fancy barn. I could go park it out in the barn, and I could do the walls and stuff and really invest in this. But really, all that's gonna attract is people who aren't like-minded, right? The best way to live really is, just like as Jimmy says, stress-free. Stress of bills, stress-free of bills. I don't have to worry about the bills. I don't have to worry about money. I don't have to worry about anything like that. I can just worry about focusing on doing what I love. Now, if I make a ton of money, sure, but I want to do it in trading. I want to do it, live streaming. I want to do it here doing what I absolutely love to do. And I know a lot of Americans are like that right now. A lot of people are stressing for that, and I'm not giving any financial advice, but I'll tell you what I did. Paid off my house, don't have any credit cards, don't have any car payments, have an awesome wife who helps me with things, and I do little side jobs here and there, little side jobs to help pay for the small bills that we have, I didn't run AC all year. That's how frugal I am, guys. Could I run AC? Sure, I could afford it. Could I go buy a Cybertruck? Sure, I could afford it. But then I'm taking the food out of my future's mouth. Eventually when I'm 45, 50 years old, I'm going to want to travel around the world. And when I do that, I've already talked to the wife. Maybe we get an RV. We get an RV. We start by traveling all of the United States and Canada. Shout out to you, Covey. And once we do all that, we settle back. We go to our next destination. We convert our money and go to Mexico, or we convert our money and go to France or Germany. We hang out there for a while, see what their customs are like. Try and just survive in those areas. Japan, it'd be kind of cool to go check out Japan and see what Japan's like. Once our kids are older and we know that they're well off, maybe I live off of my money that I have stowed away already. But instead of trying to spend that money, like I know a lot of my brethren have, they pull all their money out. It's horrible. It's sad to see. Pull all their money out. They spend it now. They ain't got nothing for the future. I got a pension, a supplemental, Got a couple little side accounts. It's nice. It's nice to know that I've worked so stinking hard the past few years that I can just sit on my butt, do this, do what I love, and if I need money, I go out, I find that money. Right now, the S&P 500 is trading at 551.11. ASTS reached a new all-time high, is continuing to push. That's a beautiful thing, as we made about $288 on the day just on this last quarter, or $550 on this last quarter. We're just letting it run. I'm going to hold on to this thing until it closes below the 10-day moving average. We have about 5 minutes, guys, 5 minutes until Papa Powell comes out and he gives his speech, and I'm going to let him talk. I'm going to let him do his thing, and we'll see what's going on with that as NVIDIA is starting to push back up here. Now, the fact that it cannot break down in this area, okay, looks to me as if this might be a nice base breakout. So why do I say that? Well, if we go ahead, and we'll just get rid of the countdown because it's starting here really, really soon. If we look at this basing area, if it breaks through this area, it might have a nice continuation higher. So that is my thoughts on that. We'll see if it does that. Yankee says, my dad has 7 figures in his retirement fund plus another 6 figures in his checking, and he's a miserable person much of the time. Yeah, it's very sad. Money does not make you happy, and that is the truth. Money makes your life a little easier, but it does not make you happy. That's why you need to find a way to be happy before you give your life over to that money, right? I mean, I could continually make more and more and more money, but it's not going to make me happy. I found that out really quick. Some of the jobs and some of the places I've worked just absolutely suck. It absolutely sucks. So yeah, good point. 7 figures, yeah, I mean, 7 figures is nice. It'll make you comfortable, but I know people with 7 figures who feel like they still need to work because they can't afford what they have. I do. It's scary. It's like, just stop it. Chill out, you know? Everybody's trying to keep up with the Joneses nowadays. I really like looking at NVIDIA at this area though, guys. NVIDIA at 116, this 116.50 area. I really, really am interested in this area. Wonder how AMD is looking after all of that. Nice pop up. See this big wick? That's what these big wicks show you. Big pullback, big wick here. That shows that maybe a lot of the sellers are being exhausted and the big buyer is here to step in with his cojones. And maybe we start heading up higher here. But of course, this is not part of my strategy. And tonight I will be going over this huge list right here. I'll be going over every one of these to see what is on my trend breakout list. So that way I can bring you guys a beautiful stock watch list for tomorrow. So we'll see what's going to go happen with this. We got plenty on this watch list, not as many as I would like to see for trend breakouts, but we'll see. Zeta's looking like a base breakout. RUN's looking like a base. SITM, nah, not so much, but you know, this is just what I do. Look at ASTS, called this trend breakout. We're in the trend breakout. See what else is setting up though. So these big pullbacks that you guys get in the market like this are really, really good for this setup. You know, ASTH, look at this thing. Looks like it broke out. Now it's just trading sideways. Got plenty coming up. We got about 1 minute and 20 seconds. Powell's going to be coming out in 1 minute and 20 seconds, so pay attention. Yeah, I got a lot to go through, guys. I got a lot to figure out. Let's see here. Covey, you going to be with us tonight? That's the real question. You gonna be with us tonight, Covey? I'm gonna shoot you a message. Shot you a DM, Covey, if you're still with us, Adam. NRIX. This looks like a nice, interesting one right here. But really, what I really would like to see is Mara. If it can hold this area right here. Oh, but see, now it broke its lows, so now I don't like it. That sucks. So this is Mara, lovely Mara, M-I-R-A, not M-A-R-A. This is Myra Pharmaceuticals, big push up, pull back, trended inside of here, but today it broke this low. It's really, really tight. I like it, but it broke that low today. And I don't like seeing that. What about Zap? What's Zap doing? Still broken down. below that $11 area. We'll see what happens. All right, Powell, it's time. Come on out. Show me what you got, Flopo Shop. This should be starting anytime here, guys. Anytime. Give it just a minute. There we go. All right, here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance, and the unemployment rate remains low. Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance on monetary policy in order to keep demand in line with supply and reduce inflationary pressures. We are attentive to risks on both sides of our dual mandate, and I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP growth moderated to 2.1% in the first half of the year, down from 3.1% last year. Private domestic final purchases, or PDFP, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal of underlying demand, grew at a 2.6% pace over that same period, the first half. Growth of consumer spending has slowed from last year's robust pace, but remains solid. Investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment stalled in the second quarter after a strong rise in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 177,000 jobs per month in the second quarter, a solid pace, but below that seen in the first quarter. The unemployment rate has moved up, but remains low at 4.1%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market have returned to about where they stood on the eve of the pandemic, strong but not overheated. Inflation has eased notably over the past 2 years, but remains somewhat above our longer-run goal of 2%. Total PCE prices rose 2.5% over the 12 months ending in June. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As the labor market has cooled and inflation has declined, the risks to achieving our employment and inflation goals continue to move into better balance. Indeed, we're attentive to the risks to both sides of our dual mandate. We have stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. The second quarter's inflation readings have added to our confidence, and more good data would further strengthen that confidence. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the longer run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Gina Smilik from the New York Times. Thanks for taking our questions. Markets pretty much entirely expect a rate cut in September at this stage. I wonder if you think that's a reasonable expectation, and if so, why not just make the move today?
Thank you. So on September, let me say this.
Always the same
We have made no
questions.
decisions about future meetings, and that includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to one or two data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. So you asked why not today, and I would just say, again, that the broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
So just to follow up on that a bit, if inflation behaves as you expect between now and September, would you regard a cut in September as sort of the baseline scenario right now?
So I guess I would think about it this way. I'll give an example of cases in which it would be appropriate to cut and maybe that it wouldn't be appropriate to cut. So if we were to see, for example, inflation moving down quickly or more or less in line with expectations, growth remains, let's say, reasonably strong, and the labor market remains, consistent with its current condition, then I would think that a rate cut could be on the table at the September meeting. If inflation were to prove, stickier and we were to see higher readings from inflation, disappointing readings, we would weigh that along with the other things. I think it's going to be not just any one thing. It's going to be the inflation data. It's going to be the employment data. It's going to be the balance of risks as we see it. It's going to be the totality of all of that that help us make this decision.
And just to follow up on that, specifically, in what ways right now, given all you've seen over the last few months in particular on shelter, on services, et cetera, in what ways are you not confident right now that inflation is on the way back to 2%?
I think it's just a question of seeing more good data. We have seen the last couple of readings have certainly added to confidence, and we've seen progress across all three categories of core PCE inflation. That's goods, non-housing services, and housing services. So it's really just, we had a quarter of poor inflation data at the beginning of the year. Then we saw some more good inflation data. We had 7 months at the end of last year. We just want to see more and gain confidence. And as I said, we did gain confidence, and more good data would cause us to gain more confidence.
Thank you. Colby Smith with the Financial Times. The March SEP pointed to 3 cuts in 2024 with core inflation at 2.6% and the unemployment rate at 4%. Since we're now at that level in terms of inflation and already beyond what was projected for the labor market, I'm just wondering if that rate path is back to being the best guidepost for policy rather than, let's say, the shallower one laid out in the June SEP.
So I would just say really the path ahead is going to depend on the way the economy evolves. And I can't really give you any better forward guidance on it than that. We didn't, of course, do an SEP at this meeting. We will do another one at the September meeting. I would just say I can imagine a scenario in which there would be everywhere from 0 cuts to several cuts, depending on the way the economy evolves. And I wouldn't want to lay out a baseline path for you there today. I've said what I can say about September and about today, though.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've said before that you wouldn't wait until inflation got to 2% to cut rates because of how inflation has lagged. Does that apply for the labor market, too? If the labor market is back in equilibrium, why is restrictive policy and potentially very restrictive policy, given the high real funds rate, warranted right now?
So this is the very reason that we're thinking about that we've said in our statement that we're going back to looking at both mandates and that we think the risks are coming back into balance. We think what the data broadly show in the labor market is an ongoing gradual normalization of labor market conditions. And that's what we want to see. We've seen that over a period of a couple of years, and a move really from overheated conditions to more normal conditions. We are watching the labor market conditions quite closely, and that's what we're seeing. If we start to see something that looks to be more than that, then we're well positioned to respond. That's part of what we're thinking.
And when you talk about seeing something that's more than whatever softness or slowdown you expect, in the past you've said that stronger growth wouldn't override better news on inflation. I wonder how that cuts the other way. If you're seeing more softness in the labor market than what you would expect, does that change the calculus on what you're looking for out of the inflation numbers to recalibrate policy?
So we have growth isn't one of our three. We have 2 mandates, as you know. The labor market, maximum employment is one, and stable prices is another. So we weigh those 2 things equally under the law. When we were far away from our inflation mandate, we had to focus on that. Now we're back to a closer to even focus. So we'll be looking at labor market conditions and asking whether we're getting what we're seeing. And as I said, we're prepared to respond if we see it that it's not what we wanted to see, which was a gradual normalization of conditions. If we see more than that, and it wouldn't be any one statistic, although of course the unemployment rate is generally thought to be a good single statistic, but we'd be looking at wages, we'd be looking at participation, we'd be looking at all the things, surveys, quits, hires, all of those things to determine the overall status of the labor market. But we're looking at it now. I would say, again, I think you're back to conditions that are close to 2019 conditions, and that was not an inflationary economy. Broadly similar labor markets then. I think core inflation was actually running below 2%. So I don't now think of the labor market in its current state as a likely source of significant inflationary pressures. So I would not like to see material further cooling in the labor market, and that's part of what's behind our thinking. The other part, of course, is that we have made real progress on inflation, and we've got growing confidence there that we are not quite there yet, but we're getting more confident that we're on a sustainable path down to 2%. So those two things are working together, and we're factoring those both into our policy.
Chris Rugaber at Associated Press. You mentioned not wanting to see any further cooling in the job market. Why not, or would you consider preemptive cuts to prevent if you saw risks of an unexpected cooling? Is that something you would cut ahead of time for?
So I wouldn't say I wouldn't want to see any other cooling. It would be more of a material difference. If we'd be looking at this and if we see something that looks like a more significant downturn, that would be something that we would have the intention of responding to. So in terms of, I don't think of it that way. I think of it as, we're actually in a good place here. We're balancing these two risks of, go too soon and you undermine progress on inflation, wait too long or don't go fast enough, and you put at risk the recovery. And so we have to balance those two things. That's the nature of having two mandates. And I think this is how we balance them. It's a rough balance, but it does feel like the labor market feels like it's in a place where it's just a process of ongoing normalization. 4.1% unemployment is still historically low, and we'll just have to see what the data show us.
And just to follow quickly, wanted to see what you thought of the recent JOLTS report, which did show gross hiring has come down even below 2019 levels. Layoffs remain low, so it painted a picture of a very static labor market. Is that sustainable in your view, or something that is worrying? Thank you.
So I think all of the data points continue to point to kind of the direction we would want to see. So that was taken as there was a decline in job openings. That was good. Today's ECI reading was a little softer than expected, so that's a good reading. It shows that wage increases are still at a strong level, but that level continues to come down to more sustainable levels over time. That's exactly the pattern that we want to be seeing. So I think the data we've been seeing in the labor market are broadly consistent with that normalization process. Again, we're closely monitoring to see whether it starts to show signs that it's more than that.
Steve Leisman, CNBC. Mr. Chairman, back in March you talked about cutting rates as a process, and in June you talked about the idea that, one rate cut wouldn't do anything. So I wonder if you can sort of follow up on Colby's question. Talk about, are you weighing the economy right now in terms of its ability to withstand multiple rate cuts? Talk us through the process that you're thinking, or is it just one rate cut, or are you in the process now of thinking that rates need to be normalized here? Thank you.
Yeah, I can't really say that, honestly. We've seen significant movement in the labor market, and we're very mindful of this question of is it just normalization or is it more? We think it's just more normalization, but we want to be in a position to support the labor market. At the same time, we're seeing progress on inflation. So, we actually got to this. We raised rates a year ago at the July meeting, and if you look at the situation in the economy a year ago, inflation was over 4%. It was a completely different economy. Now we've made a lot of progress, and the labor market has, I think, unemployment was in the mid threes. So it's a different economy, and I think it's coming to be time to adjust that so that we support this continued process. The thing we're trying to do is, that we have we've had this really significant decline in inflation, and unemployment has remained low. And this is a really unusual and historically unusual and such a welcome outcome for the people we serve. What we're thinking about all the time is how do we keep this going? And this is part of that. We think we don't need to be 100% focused on inflation because of the progress we've made. 12-month headline at 2.5, core at 2.6. It's way down from where it was. The job is not done on inflation, but nonetheless, we can afford to begin to dial back the restriction in our policy rate.
S&P 500 at 553.14.
I think we're just as part of a process. In terms of what that looks like, I think most rate, you would think in a base case that policy rates would move down from here, but I don't want to try to give specific forward guidance about when that might be, because the pace at which it might happen, because I think that's really going to depend on the economy, and that's highly uncertain.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. On inflation, do the past few months of good reports look like what we saw last year, where you really had a lot of momentum with a few bumps in between? Would you characterize that kind of momentum as back on track at this point in the year?
Actually, what we're seeing now is a little better than what we saw last year. Last year, as we pointed out late in the year, a whole lot of the progress we saw last year was from goods prices, which were going down at an unsustainable rate, disinflating at an unsustainable rate. This is a broader disinflation. This has goods prices coming down, but we're also now seeing progress in the other two big categories, non-housing services and housing services. So, so the thing is, you got 1 quarter of that. We had 7 months of low inflation. You got 1 quarter of this. I would say the quality of this is higher, and it's good, but so far it's only a quarter. So I think we need to see more to know that to have more confidence that we're on a good path down to 2%. But as I mentioned, our confidence is growing because we've been getting good data. And things like the ECI report and, frankly, the softening in the labor market conditions, give you more confidence that the economy's not overheating. It doesn't look like an overheating economy. And it looks like an economy that's normalizing.
Okay. And if we were to think about the first couple of months of the year, is there any sense now that they were these blips that could have actually allowed for earlier rate cuts, as were some of the projections going into 2024?
So the thing about if what it is seasonality, and it could just be, it's very, very hard to do appropriate seasonal adjustments. If that's what it is, then that actually implies that other months we're reporting too low inflation. If you smoothed it out, it's a zero-sum game, and that's why we look at 12 months. We look at 12 months because that takes all that out, all those effects out. 12-month now is 2.5% headline, 2.6% core. This is so much better than where we were even a year ago. It's a lot better. Now, the job is not done. I want to stress that, and we're committed to getting inflation sustainably down to 2%, but we need to take note of that progress, and we need to weigh the risks to the labor market and the risks to our inflation target now more equally than we did a year ago.
Michael McKee from Bloomberg Radio and Television. I'd like to ask you about the balance of risks as the American people see it. At this point, is the risk greater to leave interest rates where they are, given the damage that higher interest rates do to the economy in slowing demand and raising prices? Or is it more important for the American people that you keep rates where they are to bring inflation down?
I think that we've been given an assignment by Congress. This is how we serve the American people, is by achieving maximum employment and price stability, right? And so in our, quasi-constitutional document, the Statement on Longer-Run Goals and Monetary Policy Strategy, we look at the two goals, and if one of them is farther away than the other, the two variables, inflation and employment, if one is farther away from its goal than the other, then you concentrate on the one that's farther away, and you take account of the time to reach the goal. So for the last couple of years, the best service we could do to the American people was to focus on inflation. But as inflation has come down, and I think the upside risks to inflation have decreased as the labor market has cooled off, and labor market has softened, probably the inflation is probably a little farther from its target than is the employment, but I think the downside risks to the employment mandate are real now. So we have to weigh all that. And if you think about where that takes us, is we have a restrictive policy rate. It's clearly restrictive. It's been the rate we've had in place for a full year. And the time is coming, as other central banks around the world are facing the same question. The time is coming at which it will begin to be appropriate to dial back that level of restrictions so that we may address both mandates.
Well, you have event risk, basically, with the jobs report on Friday and another one before you meet again. Are you certain that you won't fall behind the curve and lead to unnecessary unemployment if you wait until September?
Certainty is not a word that we have in our business. So we get a lot of data between now and September, and it isn't going to be one data read or even two. It's going to be the totality of the data, all of the data, and not just and then how is that affecting the outlook and how is it affecting the balance of risks? That's going to be the assessment that we do. Of course, we'll all look carefully at the employment report, but so much other data coming in, and so much happening between now and the September meeting, and we'll make a judgment.
Thank you, Mr. Chairman. Edward Lawrence, the Fox Business. I do want to dig deeper on what Michael and what Nick were asking. There's a shift in the statement to balance between the focus between inflation and jobs. Looking at the job sides, we've seen wage data show sort of an abrupt slowing. We're hearing on earnings calls from companies like Intel abrupt layoffs. In the jobs report from the BLS, government jobs has been a leading creator. Could the government jobs as a sector hiring mask underlying weakness in the jobs report?
Well, we'll look at everything. We've seen some tendency to have a narrowing base of job creation in some months going back, but then we've had some months where job creation was broader, and also the headline number of jobs has come down. So but you look at the whole thing, and I think you do look at private demand extra carefully. To your point about government. So we'll just be looking at all those things.
So as a follow then, so could the Fed then be behind the curve? Because you said some of the reports last meeting, you said the reports could be noisy or overstated. Was there a discussion of what kind of discussion was there for a cut today? And could the Fed be behind the curve?
Yeah, so look, the objective is to balance the two risks, right? It's the risk of going too soon and the risk of going too late. We've been, we had 7 months of good inflation data at the end of last year. We said we wanted to see more. We pointed out that too much of this was coming from goods, and sure enough, the first quarter wasn't great inflation data. Now we've got a quarter that is good, and we're balancing the risk of going too soon against the risk of going too late. That's what we're doing. There's no guarantee in this. It's a very difficult judgment call, but this is how we're making it. But in terms of today, your question about today, we did have we had a nice conversation about this issue today. The overall sense of the committee, as I mentioned, is that we're getting closer to the point at which it'll be appropriate to begin to dial back restriction, but we're not quite at that point yet. We want to see more good data. The decision was unanimous. All 19 participants supported it. But there was a real discussion back and forth of what the case would be for moving at this meeting. A strong majority supported not moving at this meeting. That was the strong sense of the committee. But it's a conversation that we had today, certainly.
Courtney.
Courtney Brown from Axios. Thank you for taking our questions. When the Fed was raising rates, there was a lot of conversation about long and variable lags. I wonder if that applies on the way down too. How are you and the committee thinking about that?
Yes, it does. And I think the lags have kind of showed up here in the last 6 months, by the way. You really do now see the restriction, whereas, even a few months ago, people were questioning how restrictive policy was. Look at the labor market now. You can see, and look at inflation, rate-sensitive, interest-sensitive spending. You really do see now that policy is restrictive. I wouldn't say it's extremely restrictive, but it's certainly effectively restrictive. Yes, the lag should be on the way down. It should take some time to get into the full economy, affect financial conditions, and that affects economic activity, hiring, and that kind of thing, and ultimately inflation. It's not instantaneous, although it's faster than it used to be because markets move now in anticipation of our moves.
So are you worried then that if monetary policy acts with long and variable lags, even when you're lowering interest rates, it might be too late for the Fed to help stave off any kind of slowdown in the labor market or broader economy?
Yeah, we have to worry about that. You're just to make it clear, it's a very difficult, challenging judgment, and we don't want to go too soon. We don't want to go too late. But this is how we've made that judgment. I feel good about where we are. We're certainly very well positioned to respond to weakness with the policy rate at 5.3%. We certainly have a lot of room to respond if we were to see weakness. That's not what we're seeing, though. What we're seeing, look at the first half growth numbers. Look at PDFP at 2.6% for the first half. It's not signaling a weak economy. It's also not signaling an overheating economy. Labor market, admittedly, the unemployment rate has moved up 0.7, and we're seeing a normalization there. But wage increases are still at a high level. Unemployment is still at a low level. Layoffs are very low. Initial claims have moved up, but they're pretty stable, and they're historically not high at all. So the total scope of the data suggests a normalizing labor market. And again, we are carefully watching to see that continues to be the case.
Victoria.
Hi, Victoria Guido with Politico. On the labor market, I was wondering, how worried are you all about unemployment rising to the point where it triggers the SOM rule? And would that potentially affect how quickly you cut rates?
So I would just say that the question really is one of, are we worried about a sharper downturn in the labor market? So, and the answer is we're watching really carefully for that. We're aware of that rule, which is really I would call it a statistical thing that has happened through history. A statistical regularity is what I'd call it. It's not like an economic rule where it's telling you something must happen. So, again, what do we see? What are our eyes telling us? We look at all the things we're seeing, and what it looks like is a normalizing labor market. Again, job creation at a pretty decent level, wages moving up at a strong level, but coming down gradually. Job vacancies have come down, but they're still high by historical standards. So, again, I've been through some of the data already, but what we think we're seeing is a normalizing labor market, and we're watching carefully to see if it turns out to be more. If it starts to show signs that it's more than that, then we're well positioned to respond.
Is there reason to think that the labor market might behave differently this time than it has historically?
I think, history doesn't repeat itself. It rhymes. I think that statement is very true about the economy. You never assume it's going to be just the same. An example would be, is there a trend increase in the level of vacancies? There are many, many examples, so it's never exactly the same. Also, let's remember that this pandemic era has been one in which so many, apparent rules have been flouted, like the inverted yield curve, for starters. So many pieces of received wisdom just haven't worked, and it's because the situation really is unusual or unique in that so much of this inflation came from the shutdown of the economy and the resulting supply problems in the face of, admittedly, very strong demand. So the whole situation is not the same as many of the other prior inflation or downturns that we've seen, or business cycles that we've seen. So we're having to learn, we're having to, to be very careful about the judgments that we make, I would say. So we don't assume that these regularities will just repeat themselves automatically.
Thank you, Chair Powell. I'm Mara Mokwe with Bloomberg. There seems to be quite a difference between what the anecdotal data are telling us, such as the very recent downbeat beige book, and the hard data. Do you take those anecdotes seriously? That is, that the economy and labor market are cooling much more rapidly than what's shown in the data?
So I do take that seriously, and the beige book is great. What's even greater is hearing the Reserve Bank presidents come in and talk about their conversations with businesses and business leaders and workers and people in the nonprofit sector in their districts. But I'll tell you, it's a pretty, the picture is not one of a slowing or, a really bad economy. It's one of, there are spots of weakness, and there are regions where growth is stronger than other regions. But overall, it's, again, look at the aggregate data. Aggregate data is, particularly PDFP, private domestic final purchases, is 2.6%, and that's a good indicator of private demand. So we listen to all of that, and it does. I think it's important to listen to anecdotal data and not just look at the aggregate data. Especially, it's very hard. GDP data can be volatile quarter to quarter, so it's just hard to measure economic activity. There are a lot of. It's just difficult to do. So I look at both. But I wouldn't say that the anecdotal data is uniformly downbeat. It's more mixed.
Thank you. Jolene Kent with CBS News. Chair Powell, thanks for taking our questions today. You have consistently said that the Fed does not consider politics in making decisions. With a possible September rate cut on the table, it would be less than 2 months before the election, and former President Trump reportedly said that cutting rates so close to the election is something the central bank knows they shouldn't be doing. What's your response, and do you believe it's possible to really remain apolitical with a September rate cut?
I absolutely do, and I think it's, first of all, we haven't made any decisions. I would say it this way. Haven't made any decision about any future meeting. I don't know what the data will reveal or how that will affect the appropriate path of our policy. I really don't know. I do know how we will make that assessment. That's what I do know. So if you take a step back, the current situation, again, is inflation has come down much closer to our goal, and that's happened while unemployment has remained low. We're very tightly focused on using our tools to try to foster that state of affairs continuing. That's at each of our meetings, and all of our decisions are focused strictly on that and really on nothing else, doing our part, whatever that part may be. We're using our best thinking. We're doing our best to understand the economy. We follow academics. We follow the many commentators who bless us with their commentary, but we don't change anything in our approach to address other factors like the political calendar. Congress has, we believe, ordered us to conduct our business in a non-political way at all times, not just some of the time. I'll say this too. We never use our tools to support or oppose a political party, a politician, or any political outcome. The bottom line is, if we do our very best to do our part and we stick to our part, that will benefit all Americans. If we get it right, the economy will be stronger, we'll have price stability, people will find jobs, wages will rise in real terms, everyone will benefit. So that's what we believe, and that's how we will always act. This is my 4th presidential election at the Fed. I can tell you this is how we think about it. This is what we do. So anything that we do before, during, or after the election will be based on the data, the outlook, and the balance of risks, and not on anything else.
Just a quick follow-up. Do your economic forecasts and models take into account the two very different economic plans of these two presidential candidates, Harris and Trump? And if so, how?
No, we do not do that. We absolutely do not do that. We don't know who's going to win. We don't know what they're going to do. We don't act as though we know, and we just can't do that. We basically have our forecast. We can run simulations of different potential policies, but we would never try to make policy decisions based on the outcome of an election that hasn't happened yet. That would just be a line we would never cross. We're a non-political agency. We don't want to be involved in any politics in any way, so we wouldn't do that.
Thank you, Chair Powell. Nicholas Jasinski from Barron's Magazine. There hasn't been a dissenting vote on an interest rate decision in some time. If the data do evolve as you expect, if you do have more confidence by the September meeting, do you get the sense that there will be a unanimous vote on an interest rate move in September? Or basically, are there meaningful differences in committee members' assessments of how much more confidence is needed?
So there are always meaningful differences. There are, and we talk a lot before, during, and after the meeting. We do have a very robust discussion of these things. You're right that in most cases, people, if they feel heard and they feel that their position has been given serious consideration, for most people, most of the time, that's going to be enough. There are dissents. That's fine. No one has a veto. No single person has a veto. So it just is a question of who will vote for and against. We've had dissents. We haven't had so many during the pandemic era, and it just may be that we felt more united because we felt under a lot of pressure to get things right. But before the pandemic, we had plenty of dissents, and dissents happen. It's part of the process. There's nothing wrong with dissents, and if it happens, it happens.
Hello, Jean Young with MNI Market News.
Is a 50 basis point cut as a first cut at all likely or even on the table? Thank you.
You know, I don't want to say, I don't want to be really specific about what we're going to do, but that's not something we're thinking about right now.
Jennifer.
Of course, I haven't made any decisions at all as of today.
Thank you, Chair Bell. Jennifer Schonberger with Yahoo Finance. Not to get into the minutes, but you said there was a real discussion today for moving at this meeting. I'm curious if you could provide some more color on the nature of the discussion today at the meeting about a possible rate cut as early as September.
Well, so, you know, the way the meeting is set up,
Everybody's asking the same damn
first
question.
day, there's a discussion of financial stability because
Same
it's
question,
every
just a
other
different
meeting we
way.
have that. And then we have an opportunity to comment on that. Then we have an economic go-around. And then this morning, we have the monetary policy go-around. And I think in people's economic go-around and in their monetary policy go-around, people express their views about this. And there, you know, there's a range of views. People, as you will know from the speeches that they give, people have different ways of thinking about the economy. And so in the minutes, we'll lay this out in a much better way than I can do off the cuff. But there's a range of perspectives, and you know. But I do think that we're a consensus-driven organization. People come together. This was a unanimous decision, and at the end, everyone supported the outcome, not just the voters, but everyone. So I would also say some people examined the possibility, the case for moving at this meeting, but overwhelmingly the sense of the committee was not at this meeting, but as soon as the next meeting, depending on how the data come in.
But there is a growing sense of confidence that you could move at the next meeting, assuming
Yes.
inflation comes.
Well, assuming that the totality of the data supports such an outcome, no question. That is the case. That, as I mentioned, we think that the time it's approaching, and if we do get the data that we hope we get, then a reduction in our policy rate could be on the table at the September meeting.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Former New York President Bill Dudley wrote an op-ed in Bloomberg earlier this month, which you probably saw, in which he said, quote, "It might already be too late to fend off a recession by cutting rates. Dawdling now unnecessarily increases the risk." Is he wrong?
So this is the judgment that we have to make, and we're well aware of the judgment. We're as I've said, we have to weigh the risk of going too soon against the risk of going too late. If we go too soon, we can, we had a lot of advice, to go ahead and cut after the 7 good months of last year. We didn't. We said we needed to see more. Then we saw some higher inflation. We've seen 1 quarter of good inflation, and we've seen the labor market move quite a bit. And as I mentioned, I don't think it needs to, cool off any more for us to get the inflation results that are related to the labor market. Not all inflation is, of course. So I think it's a difficult judgment to make, and what you see is the judgment of the committee is that time is drawing near. That time could be in September, if the data support that.
And have the chances of a hard landing increased?
So I don't know whether they've increased. I think they're low. I think this is, you don't see any reason to think that this economy is either overheating or sharply weakening. That's just not in the data right now. What's in the data right now is an economy that's growing at a solid pace, a labor market that has cooled off, but nonetheless, unemployment is low. The data overall show a strong labor market. So that's really what you see. It's neither an overheating economy nor is it a sharply weakening economy. It's kind of what you would want to see, but of course, the job is never done. We're watching to see, which way the economy heads, and I think if we are to respond to weakness, we're certainly, well equipped to do that. But that's not what we're seeing. What we're seeing is strong economic activity and a good labor market and inflation coming down.
Thank you so much. In the minutes of the June meeting that came out a few weeks ago, there was a discussion about communications, and some Fed officials said maybe the Fed wasn't as clear enough about its reaction function. And when I talk to the commentators who bless you with their comments, they say that they really don't have a sense of what is going to judge, maybe not the first cut, but the pace of the cuts going forward. They don't have a good sense of that. Is there anything you can say, like, how will we judge that?
Yeah, I mean, I think the reality is that forecasters, and this isn't just the Fed by any means, forecasters have been continually surprised by, for example, the strength of the economy last year. So I think we have to be pretty humble about giving forward guidance about this, that, and the other thing. We need to be pretty careful about that. And, you know, when you're saying you're going to be data-driven, of course, it's always what the data, how they affect the outlook and the balance of risks, but nobody has great vision deep into the future. In terms of a reaction function, that's a long time, you know, discussion that people have had forever. I think people have understood for a long time, actually, that we were very focused on bringing down inflation. Nobody was really confused about that. The data have, you know, again, you've seen significant improvement in inflation just for the last quarter. Markets move around on that, on the data, really, not so much. It's not really what we're going to do. It's more just that the data keep coming in, and markets are very, very responsive to that data right now.
Go to Jeff for the last question.
Thank you, Mr. Chairman. I'm going to change gears on you just a little bit from all of the rate talk and whatnot. With Fed now being in the books for a little over a year, there hasn't been a whole lot of talk about central bank digital currency, and wondering if you could give us an update on where things are with that. Is that considered a dead issue now? Is it still something that's being discussed within the committee, and what's happening with that?
It's not something that comes up at all in the FOMC. So more broadly, digital finance is an area that has really significant implications for payments generally, instant payments, and it's something that's going to really change the way it's going to make more efficient and hopefully safer and all those things the way payments are made around the world. And so we have people who are researching that and trying to keep up to speed because we play an important role in the payments sector, both as a convener and as an operator too. In terms of a CBDC, there's really nothing new going on. There's not much going on at all. We don't have the authority to issue a retail CBDC that's available to the public. We're not seeking that authority. So what we're doing is keeping up with developments there. Pretty much every major central bank in the world is at least doing that. Some of them are actually seriously looking at implementing a CBDC. We're really not. We're really just evaluating, the story and what's happening out there. I think it's work that we need to be doing which could be very beneficial down the road, but we don't have on a CBDC. We don't have any plan to. We would need to go to Congress, and we have no plan to do that. No one here has decided that we think it's a good idea yet. Thank you.
All right, Mr. Powell, ladies and gentlemen, Mr. Powell. He's all set. Well, at least we didn't get a tank, The S&P 500 held up well. You can see we held up above that 21-day moving average. We have now ended the poll. The poll, we had 60% of you say yes, we were going to stay above that 21-day moving average. As of right now, it is looking pretty true. It is 3:18, so the market's closing in a little less than 45 minutes. So we'll see exactly what happens if it does indeed want to hold over the 21-day moving average. So we'll see. As long as there's nothing crazy that goes on, I think we have the ability to hold above that and hold this gap that we held overnight. So let's take a look at the IWM and see how it fared as we pushed up a nice pop here. Let's look at the daily to see where we stand. And look at that. That is beautiful, folks. Look at this. Made a new a new yearly high, as you can see here, and pulled back. So this is looking like the IWM is also holding its strength in the overall market. So this is a very, very good sign. Saeed said, what do you think about DJT? Well, it's beat down. It's below all of its daily moving averages, but we can take a look at it. So DJT, like I was saying, it's below all of its moving averages, and it's sitting at an all-time low. Its relative strength is at 60. It actually is a faster mover, but this is not something that I'm looking at currently. We don't have any kind of play on this. Beastie says, is he talking blockchain? That's a great question. I don't think I caught that. I don't think he was talking about blockchain. I do know that he has said a few things about blockchain. I don't want to butcher it, but he has said a few things about blockchain, and those things were that he doesn't, he knows they exist, but he doesn't see any government power actually using a blockchain, or at least in America. America is not going to be using a blockchain or making their own digital currency, and that the dollar is still strong and people are still using our dollar to continue to use for trade. Okay, so the QQQs, let's see if they held their pop. So big pullback on the QQQs. I used this anchored VWAP from its previous lows, and you can see it held that anchored VWAP, popped up higher, still below a 50-day moving average, and just got up over a 10-day moving average today. So was that it? Was that the sell-off for the QQQs? We had around a 9.83% sell-off, and they say that, these sell-offs happen, these 10% sell-offs happen every so many years, and you can see we have had it multiple times. Here's one of them. That was 11%. Then we had this one here. That was a quick 7%. And then this one here, we were around a little over 9%, 9.5%. Is that it? Is that the pullback? Is that what we are done with here? And then we start rip, tater, chip into the north side? That is the real question. Of course, now that we're above a 21-day moving average, I feel a little bit more comfortable, but I will be ready and willing once we get a follow-through day. And as IBM Investors, IBD, sorry, Investors Business Daily talks about, it is a follow-through day is when you get more volume after we push up above these lows. So we get a big push up or above all the moving averages. Now if we can get a follow-through day, meaning more volume within the next, I think it's 3 to 5 trading days, that would be nice to see. Dan Bob says blockchain is being considered by USA Federal. Well, that's not what Papa Powell has said about blockchain. And actually, what we can do just to kind of just to mitigate any of these questions, we can go to ChatGPT, and what we can do is we can ask ChatGPT, what has Fed Chair Powell said about blockchain? And it should spit out some stuff for us to read here. And I can read this to you guys really quick. Jerome Powell, the chair of Federal Reserve, has made a number of statements about blockchain technology. Potential and innovation. Powell has recognized that blockchain technology could have significant potential for innovation, particularly in such as payment system, financial infrastructure. Two, the risk and challenges. At the same time, Powell has been cautious about the risk associated with blockchain and cryptocurrency. He has highlighted concern about the potential for financial instability, regulatory challenges, and risk posed by the use of crypto in illicit activities. And three, central banking digital currencies, or CBDCs. Powell has been open to exploring the ideas of a central bank digital currency, or a CBDC, while not directly about blockchain. His discussion about CBDCs has touched upon blockchain technology as a possible underlying infrastructure. He has stressed that in any decision is to implement CBDCs would require careful consideration of the associate benefit and risk. Overall, Powell's remarks reflect a balanced view, recognizing blockchain as innovative potential, while also emphasizing the need for careful regulation and oversight. So he has said that the central banking digital currency, so saying the central banking system might explore these ideas, but he's neutral about it, noting that there could be positives and there could be negatives about these cryptocurrency blockchains. So he's not talking about specific blockchains, but he is talking about a central bank digital currencies. So He just said his committee doesn't, but more to the Fed than Powell. Not sure I read that right. All right, guys. Well, if any of you are still left standing in this building, hoorah! Thank you so much for joining me today. I think I'm going to take off here, but I tell you this, I really appreciate each and every one of you being here. We have an amazing Discord meeting tonight. We're going to go over a little bit of anchored VWAP. We're going to go over anchored VWAP. We're going to use anchored VWAP to see where the overall market is. Of course, we'll go over what a follow-through day is and all that good stuff. But while we are here, if you guys will do me a huge favor, take a little peeky gander at my screen if I can bring it up fast enough. Let's see how fast I really am. Let me bring this up right here. David Worrell. All right, what a follow-through day is. All right, take a look at my screen, guys. This is a nice looking screen. Wow, would you take a look at that screen? And if you guys would do me a huge favor, hit that like button, hit that subscribe button if you're just joining us. Make sure that you guys go ahead and click on this more down here. You'll find in this a link tree. And in this link tree, you can go to my YouTube. You can go to our Discord. You can click on Trading View. You can check out this Trading View. You can get started for absolutely free. It gives you this amazing platform. Of course, we have an Instagram. We have a TikTok. We have it all, guys. We have everything that you need to get started when it comes to trading, or Papa Powell himself. Just do it, baby. Click that like, click that subscribe button, and click that link for the Trading View. I hope you guys had an awesome day. Look at that chin. What's up, Troy Wiseman? Good to see you, brother. Good to see you. Jimmy Bright made my workday a little better. Jimmy, I appreciate that, brother. I'm glad we could listen to old Papa Powell. And I will see you guys out, of course. We'll make sure that we see everybody out of the stream. We'll say goodbye to all y'all. Market down again, Akash says. Well, if you look at it, it's actually green on the day. We're sitting at 550.44 right now. You might be looking at it on a 1 minute. That might be, a little bit concerning. If you look at it on a 1 minute, you can see the volatility. But if you look at it on the daily, which I highly suggest you always zoom out and look at the daily, you'll see that we're still above a rising 10 and 21-day moving average. Now, by the end of the day, that might change. You never know. But we're going to see you guys out. We'll see you guys later on tonight in the Discord. Join the Discord. It's absolutely free. And please, if you love me, please click on that TradingView link. Download this amazing broker. Use that link so you guys can get money off if you decide to pay for it. But anyway, we'll see you guys very, very soon, and I'll see you on the way out. Thank you so much. First and foremost, Dan Bob Dan, the greatest moderator alive. Thank you so much. He is a huge part of this team. And of course, Beef Stewie, always here for me. Both of you boys are always here from the time I get on stream to the time I get off, and then even in the after hours when I need to chat and get my thoughts straight. Akash, thank you so much for joining. Troy Wiseman, a little late to the party, but I am glad that you are here. Jimmy Bright, you made my day a little bit better too. Thanks for hanging out with me all day, brother. It's a good time. It really is. We'll see you tonight, man. We'll see you tonight. Be Stewie. Hassan Smaid. Oh, man, I just seen your chat. Smad Hassin. I don't know if I'm saying that right, but Starbucks. Yeah, definitely Starbucks. We could take a look at that tonight. If you join the Discord, we have a meeting tonight at 9 p.m. Saeed, also, is there two Saeeds? We have Saeed and Hassan. We have two Smaids? I don't think I'm saying it right. It's good seeing you. Predator, I'm glad you heard the same 6 questions that I heard too. So thank you so much, Predator, for paying attention to the chat because, gosh, man, when are you cutting Fed interest rates? You cutting Fed interest rates next month? What are you doing about Fed interest rates? Do you guys think you'll cut? I mean, it's the same damn question. If I had a question that I could ask him, I'm sure I could think of something a little better than if he was going to cut Fed interest rate. Don't use the poor guy. Paul, it's good to see you, man. I'm glad that you could make it in. Kevin Kilgore, good to see you, brother. Thank you so much for popping in here. Yeah, that EA on that daily or weekly, finally, it looks like it's starting to break out. Lee, good to see you, brother. Glad you popped in here. Hope we earned your subscription. Nalani, good to see you, brother. Hope you're still with us. Damn Yankee, that damn Yankee. I'm glad you're in with us, brother. Ronnie Little stopped by. We got Awesome Art or Muley. Good to see you. TradeWise was in here too. Adam, of course, my right-hand man, the man himself, the legend, the myth. But he's a real thing. He's the real deal. Mr. Covey, thank you so much for joining us today, brother. Zamora was here. Good to see you, girly. Yosef, hell yeah, Yosef. Glad you were here, brother. And I hope that concludes our night. Thank you guys so much for stopping in. Yeah, we'll see you tonight, B. Stewie. Take care, guys. Have a good night. Hell yeah, Troy. I appreciate you hanging out, man. I just seen it. I seen it. I see you, brother. Thank you so much, Troy.